put that back. Okay, macro. I have some notes or some thoughts, and then I'm sure Easy has a bunch of notes as well.
Yeah, go for it.
On the macro side, we are seeing a rotation through other sectors. And so I can rerun this analysis in a second, but consumer staples have been leading. So if you look at the Pepsi chart, which is what George was saying, like you're hitting all-time highs on consumer staples like Pepsi, on Coca-Cola probably. I wouldn't be surprised. Like, I don't know what this wick is, but I'm sure it's a liquidity hunt for higher. Even things like Disney are looking kind of bullish right now because you're coming to that discount area and I think you're going to pop. So consumer staples by far have been leading by like 11% in this case. And the volume that you're getting on the inflows out of like SPY or other ETFs have been kind of insane. So my thesis here is like people are buying all these consumer staples because it's a flight to safety. You're buying energy because it's a necessity. Like you're still getting winter, you're still getting potential like outbreaks of war. And then everyone seems to be buying memory and storage, right? Yes, they're beaten down a little bit. Like I'm looking at MU, for example, it's likely going to take that imbalance at 430 area by the end of the week, if not sooner. And then SNDK has been on a monster run for the last like 6 months. It's up like 1,300% or something like that. But these charts are kind of predictable, right? Because once you have these relative equal highs and you read liquidity above it, you're going to go back down to find the other liquidity below it, right? So they're kind of easy to see. What I've been using the George's rotations for, frankly, is to figure out exactly where the money's flowing, right? And for us to do this kind of analysis, it might take hours. And a lot of this data isn't readily available. So like it's hard to understand exactly where the money's moving, how much of it is moving, if there's week-on-week changes or month-on-month changes. And so this is what I use. Like I've been looking at, okay, they're moving money outside of SPY, for example, into DIA or consumer staples, energy, materials, industrials, right? Financials. They have inflow. Yes, they're down month over month. But if I look at the Goldman Sachs chart, it should be starting that uptrend soon, right? During discount, you've rated this liquidity here, right, from these relative equal lows. You're likely going to go up to that 990 area in the next month or so. What hasn't been doing too well is all the healthcare names, utilities, real estate, especially in technology, have not done well, right? And you can see that because when you look at index sector to stock, QQQs, Microsoft, all the tech names are getting beaten down. Like if you look at NVIDIA as well, everything is getting hammered there, right? And these are what is making up most of the holdings in the QQQ index. So if you're getting an outflow from these plays, like your bias should always be towards shorting the QQQs when they get to critical levels, right? At 626, 622, 617 is your put wall. You've broken that and you're now slicing through the other put wall at 607. And the next layer of support here is likely going to be that 600 area that's been strongly defended. If you break that for whatever reason, which I think it's going to be pretty likely tomorrow, like you got to go very far back on the chart to find where the next layer of support is. And I'm not saying support in terms of like how you and I think about retail support, where are people going to buy, but institutions, right? Where have they stepped in time and time again, right? And so if you look at it on a daily chart, or if I look at it on a daily chart, institutions are stepping in when it's hitting like 560, 580. That's the next layer of support here, right? So you go through 600 tomorrow, you're likely coming back down to the test that 580 area. Whether that happens in the next day or two, I don't know, but it's pretty likely if all these companies are missing on guidance and revenue. Okay. And then George already identified Microsoft short. I think I've generated this maybe a bit too late because it's already been, it hit his goal, hit his entry, hit the stop loss. And the target was 411. We're almost there at 411 post-market right now. It's at 411. That's insane. So I really like the targets that George gives us because he just identifies where the next layer of liquidity is. He gives you the entry and he just says, here's your target to scale out of that position. And that's exactly right. 411.61 is kind of your take profit zone, right? If it sweeps below that and goes up, I don't know, but it's pretty likely that that's what's going to happen. PEP, we already went through, had all-time highs. PG, let's go look at that. PG is up as well. I actually drew this a couple months ago. When did I draw this? Yeah, November. So I was expecting something like this. We got that very late in the game. It's like here now. So great. We're coming into that premium zone here at 162. And George is saying your target here is 159. So pretty close to, how I had identified it. We already went over KO and XOM calls I took from him on Friday last week. I took those 55 Cs or whatever it was and they ended up going like 300%, 200% today. I still have one runner because I think it's good to just hold runners after it's a certain level. CVX, right on again, bullish. AMT, let's see if that went up. Has not yet, but you're in a discount zone and your stop loss is 175. We rated that 2 days ago, so I generated this after. It might be on the uptrend now. Great. Use bearish on Tesla. I think it nuked today, anyways. Yep. You're broken your line of support at 420. If you can't get above 420, I don't want to swing calls because you're likely going to see 400 first before you get to the move above. So I've really liked how George does it, and I've tried to simplify the experience as much as I can to show everyone where money is flowing out of and where it's going towards, right? And it's been pretty nice to see it this way, to be honest, versus like me looking at 20 different charts or trying to find Twitter threads on where that money might be moving. So that's what I got there. Easy. I'm sure you have notes as well.
Yeah, give me 1 second. Oh shit, stuck. Fuck.
Damn it, my iPad died. Let me just see the week ahead while we're here. Neutral and SPY, QQQ, IWM bearish. All right. RUT bearish, NVIDIA bearish. I actually think he was right on that one too. Amazon, he's bullish. I think they have earnings tomorrow too, so we'll see how that goes.
Okay, I'm gonna share my screen.
Okay, if you're sharing your screen, I'm gonna pull this in.
You guys see it?
Yeah, I can see it.
All right. I think Shabs, Tim, some of you guys have seen this chart a lot. I share it pretty often. This is my leaders and laggers chart, and the way I identify macro moves and rotation is I start at the index level, and then I go to the sector, and then I'll look for individual stocks that are leading in those sectors. And this is basically what George does too. So you guys can see the watch list here on the right, right?
Yeah, I see it.
Yes, you can. Okay, cool. I have a couple columns here, or yeah, a couple columns here for indices. What I like to do is I'll start taking a look at who's leading and who's lagging the hardest. So we have Dow, we have Nasdaq, SPY, and then we have the Russell here. Estimate shouldn't be here, so that's miscategorization. Yeah, so you can clearly see Dow is the only one that was green today. That's all the boomer stocks, and tech heavily led the way down. I mean, it's like more than double the Fed that Russell is. So yeah, so that gives you an idea that okay, Dow's leading, boomer stocks are leading. I should focus my attention there. So that's where this leaders and laggards charts comes in. This is a collection of all the different ETFs out there in the market. And I know there's a fuck ton of lines here, but really what you need to pay attention to is just the margins here on the right, where you see ITB today was up 2.6%, XOP, which is consumer staples, up 3.5%, Wood, which is the home builders and home renovation, 3.3%, and then you have energy, and then some other stuff. So this gives you a really good idea of where to focus your attention. And when you go to, let me bring up George. I think Shabs has shared this quite a bit today, but I'll bring it up again anyways. Rotation analysis. All right. And so this is what you see in George. He tells you that Dow is actually bullish. Not many charts out there look bullish. The Dow is still bullish. And his top picks, two of the three are stocks you find in the Dow. PG, which some of us have been in for months already at this point, or weeks, has been one of the leaders year to date. I think it's up like 16% year to date or something like that. And Microsoft's down like 20% year to date. Yeah, so this gives you a breakdown into where you should focus your attention. If you're the type of person that only likes to play calls, you obviously want to buy calls in these leading sectors, so staples, energies, materials, industrials, financials. And if you're a macro bear like me, you're looking to short where you can and trade both sides really. So you long consumer staples and short tech, which would have been so lucrative if you did this the past week. Yeah, so that's how I start framing my macro thesis, macro analysis. Other than that, it's
Do you look at the
share.
dollar easy, or do you look at the move or VIX, or what are you looking at for macro tailwinds or headwinds?
Yeah, that's a good question. So right now, oh, this might go through over a lot of people's heads, but it's fine. Just ask questions. Right now, I think a lot of the driving forces at the macro level are the yen and the dollar. The yen has traditionally been a really good indicator of just like market instability, stability, especially because they own a lot of U.S. Treasury bonds. I think they're the number one foreign holder, and the dollar because well, the whole world runs on the dollar right now, so you got to be watching the dollar. And yeah, so right now the whole thing is that it's sort of pretty. It's I don't know. It's crazy because yen goes up too much. It's a problem. Yen goes down a lot. It's also a problem. And so that's what I'm watching. Is I'm looking for big fluctuations, which is what we've been seeing. Um, Yen diving and ripping like this. Like this is a currency that's trading like a meme stock right now. And this pairs with the dollar. One second, let me bring this up and collapse these. We don't need to talk about Nikkei or Japanese yields.
So is the theory
Um,
like a weak dollar is typically bearish for markets but strong for metals?
um, it's okay. So generally, weak dollar is good for just assets in general. If dollar is weak, you want to buy stocks, you want to buy real estate, you want to buy precious metals. It's generally very bullish for assets. The problem
Got it.
is when you have declines like this, where you're waterfalling down. For dollar, I think this is like a 4% down move in a couple of days. Yeah, almost a 4% down move in like a week, which is a currency, right? There's trillions and trillions of dollars moving around daily, and when you have price fluctuations like this, you get instability. And so dollar's falling really hard. Everyone's freaking out. That's why you see a lot of risk-off sentiment. And then I think a little day dollar bottomed recently, and that's when Kevin Warsh was announced as a Fed chair.
So that's that inside day there.
Yeah. So Warsh gets announced as Fed chair.
All right, and then we saw the bump happening on SPX and all the indices and ETFs like the 2 days after, and then it dumped.
Yeah. So I can overlay. Let me just use Dixie here, and then I'll overlay SPX on here. Let's see. Yeah.
Adams.
Items. Yeah. So you can see here the whole time it's waterfalling. Spice choppy. We had a nasty gap down one of the days. Warsh gets announced. We rallied for a little bit. And then we started rolling over again because there's this whole perception in the market right now that Warsh is the what is he? He's the
He's more hawkish.
anti Yeah, it's kind of weird. It's a kind of a paradox, an oxymoron, because he's a bullish dollar, bearish QE. So he's not. He doesn't believe in Fed saving markets.
Got it. Yeah. So, I mean, that's good for the dollar, but bad for all risk on assets, basically, which is probably why Bitcoin fell so much.
Yeah, why Bitcoin fell, why Nasdaq has been shitting itself extra hard, aside from AI fears, which we can talk about next. Um, bullish dollar, bearish QE, bullish QT, and then strangely, he's bullish rate cuts. So he thinks that it's possible to be bullish dollar, bullish running off the Fed balance sheet, but also be bullish rate cuts. So he wants to cut rates. And I think the market doesn't believe him right now. They don't believe Warsh, they don't believe Trump, even though that's what they've been. Yeah, I agree, Danny. Trump likes weak dollar. Trump today said that he wouldn't have picked Warsh if was gonna rates or raise rates or not cut rates, I guess is the right way to say it. So yeah, market's definitely confused right now, and I think they are in see it. Well, we'll believe it when we see it type of sentiment right now. And so that's why you've been seeing dollar rally, and then you've been seeing risk assets sell off, in my opinion. There's just a lot going on. You have this whole Fed
Right.
shakeup going on. You have Japan, which is like on the brink of their bond market imploding. It's a lot going on. Then you add in Iran, which is the total wild card right now. Like 1 minute talks are going well, the next minute they're not going well. It's that combination of uncertainty, which is how do we measure uncertainty? It's VIX, right? So what did VIX tap out at today? 21. So that's what you're getting these 2%, 2.5% days on NASDAQ is you're getting an elevated VIX. And you can estimate how much the moves or how big of a move to expect on SPY. It's the VIX divided by 16.
I think that's right.
Yeah, VIX divided by 16 gives you about what percent move you should expect in SPY on that day. So at its peak, VIX was 21 today, and so 21 divided by 16 is a 1.3% move. And SPY, actually, I don't think SPY did it today. SPY maybe at its worst was down 0.8, 0.9. So it's more of a range, but it does tell you when expect bigger moves.
One thing I really
Yeah.
like on the VIX, Easy and I do this quite often. When VIX is spiking above like 30, we just buy calls like a week out. And it's worked out really
Yep.
well, at least for the two of us, because when people are panicking, we just start stepping in and buying. And it's been really profitable, more so than I expected, honestly. And so I'm excited to see if VIX ever goes back to that 60 area or maybe even higher than that. Because I will just buy in the money calls for like a year out from now for every stock that I want to own and just chill, do nothing.
Yep. Yeah. VIX as an instrument is designed to mean revert. So it's not designed to stay elevated for very long. I mean, even back in 2022, which is the last like prolonged drawdown we had, it only stayed above 30 for like a handful of days. So if you bought like month out, week out calls, 2 weeks out calls, you made a really pretty penny logging in what was like a bear market essentially. Same with when was the last one we had a big spike? Liberation Day.
Liberation
Yeah.
Day for sure. I mean, that's when I started getting to trading because I was like, oh, that's to me it seems so obvious. Like if one of these instruments that are meant for a mean reversion are spiking this much, you're going to be able to roll calls almost indefinitely, right? And that's when you got those like 10x, 30x moves. I think we did this last year too, Easy, like in November or December, whenever it was, when everyone was panicking. VIX was at 30. We ended up rolling those calls for like a week out, and they were hella profitable.
Yeah. Yeah. It's whenever VIX gets above like 22, that's when I'm like looking for signs of people panicking and capitulating. Um, so VIX is really good like that. We haven't really broken 30 on a, I think, closing basis, but like 28, 29 in this market, like definitely got to start looking inverse everyone. Another thing I like looking at is, let's see, S5.
S5FI. Oh, stocks above the 50-day. I like that.
Yep. Actually, there's a 5-day one that I like. It's S5FD. S5 S5FD divided by no. S5FI divided by NDFI.
So you're saying what are the S&P 100
Oops.
stocks versus the NASDAQ stocks?
Yeah, so this is SPY stocks over 50-day divided by QQQ stocks above the 50-day.
Right. And the thesis
And
here, if
so,
those are moving up, the market's moving up.
yeah, so it's a little, let me see, I have it right? I do have it right. Okay. Um, the way to read this chart is pretty simple. It's when you see peaks, that's usually stock market bottoms. And when you see valleys, that's stock market tops.
Wait, wouldn't it be the other way around?
Ah, when this is rising, that means SPY is leading.
I see what you're saying. Got it.
Yeah. So when it's rising, that means SPY is leading. Rising means SPY is leading.
It's falling. QQQ is leading. Got it.
Falling, yep, goes QQQ is leading, which is good. I think it's like Mag 7 makes up about like 35% of SPY.
I think that's right. There are more
35% of
defensive
SPY.
names in the S&P 500 though. So this is why I like playing it personally. I love playing SPY or SPX. Is you get a bit more defensiveness in there, right? So like the moves you can get in a day is like 1.5% at most. And because there are more defensive names versus all technology in the QQQs, you're able to capture the widest spectrum possible, unless tech is leading. In this case, it's not.
Yeah. So we had a peak here January 20th. So if I pull up SPY, you can probably see Jan 20th was the local bottom. Yeah, it was the day of the bottom.
Nice. I like that. It's a good tool.
Yeah, this is one of my favorites to gauge like short term what's going to happen in like the next handful of days. And so we had a bottom here on Jan 28th, which would mean that Jan 28th must have been a top on SPY,
Yeah, basically it was.
and it was. It was
Yeah.
the top on SPY.
And then got sold off. I see. That's cool.
Yeah. So we might be putting in another lower high here. So that's something to keep an eye out. You know, this might have been all she wrote for the pullback. We retested some key levels and maybe we bounce out of here, but I don't know. Remains to be seen. Now we got to see what this candle does tomorrow.
Right. So like if we're able to make that higher high and lower high on the S5, F5 divided by NDFI, you should be able to swing calls in theory until we get to that top at 150 or whatever that is.
Yeah, exactly. We get a
Got
higher
it.
low, like around here or something. Let's make some calls.
I
You
like
don't
that.
want to break the one, I think. I think that's when things get a little hairy.
So if you go back to that, once that bottom there, at 0.70 November, what, 1st or something?
This one?
Once that
Maybe
value,
this
now go
one.
back further. Yeah, that
Here.
one.
November
November
3rd.
3rd. What happened there?
Let's see.
November
November
3rd was the bottom.
3rd. Yeah.
It was
Where'd it
a
go?
bottom. Got it.
It was
And then
a top in SPY, then we had a big drawdown.
and that's when the trend broke on. Yeah, because then you started putting the higher highs, higher lows.
Yeah. So when we're consistently falling down here, that means we're in a trend.
Yep.
So you want to start seeing, like you're saying, lower highs, lower lows. And, that means we're like trending, so safe to swing.
Got it. Yeah, because like the way that I'm reading this chart right now is like you have both an inverse head and shoulder, and then you have your classic head and shoulder as well. So there's like a moment of indecision. I don't know which way we'll go, but still bullish until we break that high there.
Yeah, it's probably easier to think about if you do it this way.
Yeah, exactly. This is the inverse
That's
now.
likely there. Yeah.
Got it.
Hey, can I chime in for a second?
Go for it.
Yeah, of course.
This is the
All
first
right,
time I'm hearing
so
Timmy's voice. This is unreal.
no, it's not me.
Damn it.
It's Easy Sniper. Anyways, there is another way to view this as well, which is govtrack.us.
Oh yeah, we need those insider tips. All right, govtrack.us. Pull it up easy.
GovTrack.us. Let's see. We track the activities of Congress and the White House.
Could you please share the screen?
Yes, sir.
So as someone who used to work in policy, this is one of my favorite tools, probably the most simplistic one, of a way to track legislation that is currently moving through the House of Representatives or the Senate. Now, for starters, even if a bill is proposed, doesn't mean it has a chance of passing. In fact, most things that are proposed don't have a chance of passing. But if we're ever curious about something, about how it's moving legislatively, this is one of my favorite tools to keep an eye on, because what aligns with the priority of different representatives or different senators can also align with the commercial interests of a specific commercial entity that is publicly traded. So easy, if you go in there and you type in the word Clarity Act on the top right, you should see that you'll probably find something like it's essentially that crypto-related legislation.
Yep.
Yep, it should be that first one. All right, just kidding. Type in HR 3633.
HR 3633.
Yep, there we
Martin
go.
Clarity Act.
Whoa.
Now this tells you the progression of that specific piece of legislation throughout the Congress. We see that this was first proposed in the House and went through various amendments, through various subcommittees, and right now it's currently stalled in the United States Senate. Once this is passed, it will update on here. But why is this a great way to track things? A lot of times, the technical name of this, Clarity Act of 2025, or HR 3633, if you're searching social media, like Twitter, X, for example, that would be one of the first and best ways to find out that specific information on how it's moving through the system. The other tool that I did want to bring up, and I'm not sure if you all use this as much, is called Open Secret. Has anyone heard of it by chance? No one? All right. Easy, would you please be kind enough to go to opensecrets.org?
Whoa.
And go ahead in there and type in NVIDIA.
That's some crazy knowledge, Tim. I like it.
Used to work
This
in the
is
sector.
crazy.
So what we're able to see here is, and again, this is not up to date. This is quarterly filings. But we're able to see, for example, in 2025, who they contributed to in terms of the politicians. What bills were they lobbying on? What specific lobbyists did they hire? Now, of course, you're just looking at who they donated to. Any smart company is going to donate to both sides of the political spectrum in order to advance their interests. But what we're specifically wanting to look at is the congressional committees that they were most active in and the legislation that they were lobbying on specifically.
I see.
All right, so
you're saying where are they deploying their capital in specific sectors? Is that right?
it's not necessarily about capital. you can't view it as CapEx.
Okay.
It's more about, in a very similar way, what are they contributing to that will benefit them the most? So that means trying to influence the outcome on a specific policy or bill that is going to be either proactive in promoting the interests of the company or actively lobbying against the specific interests for in case it's detrimental to them. So what we're able to see here, for example, is the Armed Services Committee in the House of Representatives, at least in 2024. Actually, Easy, do you have a way to cycle that back up to 2025 by chance on the top far right?
I think that's the
All
last
right,
one.
we'll just stick with that. So that was a election year, but again, we also had some significant legislation moving through the U.S. Congress at that moment in time. Armed Services Committee. What that tells me is that NVIDIA was specifically in FY 2024 was trying to specifically contribute to well, aside from Democrats, to probably the ranking member on that specific committee. Now, they had a policy focus specifically on probably trying to affect maybe the procurement of certain government contracts or chips related to that specific policy. Otherwise, just in general, this is a great way to view the priorities of the company and also on specific legislation as well. Now, this does not correlate in any way to those filings that you see openly about track Kamala Harris for track representative, etc. But again, this tells you about the priorities of the company, where they see things dynamically moving in their favor or against their favor, but ultimately where they want to position themselves for future growth. Because remember, policy is growth, and growth is dependent on the policy that is enacted by governmental organizations, whether it's the RFP for contracts or whether it is a specific security policy in U.S. foreign policy relating to allowing the general issuance by the United States Treasury of OVAC licenses to sell specific semiconductor chips to an affiliate in Taiwan that can therefore on-sell them to the PRC. So it's all interconnected. So I just recommend keeping track of these things.
I like it. You're saying these get updated quarterly?
Yes, they do.
Nice.
And yearly, depending on what it is. I know that was a lot there. I apologize if it was.
No,
But,
no,
That was
easy
awesome.
doors, yeah.
But these were just two tools I do recommend for people to utilize. And just one more thing. When
Yeah.
it comes to growth opportunities, fully agree with what Easy was saying there about utilizing specific growth for risk off, risk on assets. At the same time, there are some cyclical seasonal trades that you can count on. For example, oil traditionally goes higher in the wintertime, at least in the Western Hemisphere, mainly US, Canada, and European Union states. So we can always count on Chevron, Oxy, those things that may have a higher beta, going higher during these seasons with correlation to the price of WTI crude. In the summertime, that tends to let off because the blend is a little bit lower at that point in time. So what that means for right now, your travel stocks, say AAL for American Airlines, they're not going to be doing as hot. But on the inverse, companies like Airbnb, for example, may be good to look at because right now, at least in vacation planning trends for the rest of 2026 and so on 2027, people are already looking at when they're taking time off to go on vacation. So this is a great time to go ahead and, if you're looking at commonly issued stock, to consider looking at Expedia, Delta Airlines. As the summer ramps up and as does fall, those stocks will rise in unison with seasonality. So if you have the appetite to hold for a longer period of time, this is a good time to continue getting in on those cyclical trends.
I like it. I just got a couple of American airline calls or something.
Yeah, the worst U.S. airline.
Of course. But That's the one that's going to pump the most probably. One thing I want to show
It
you.
does have the
Yeah, go ahead.
it does have the highest beta.
Yeah, of course. That's what I'm chasing. It's a beta game. I want to show something before we close out here. Remember how I was saying we're going to read that buy side liquidity on Google at 349? Like we hit that. It's kind of cool. They swept out everything on sell side and buy side. I do think it's going to likely pump tomorrow, but we shall see. It's nice to just have that confluence from George and being able to see these levels and understand that liquidity. So I don't know. Hopefully this helps. We'll get better at these and share more of the learnings here, because we want to make sure that everyone becomes a good trader, not just taking the signals for what they are, but understand how these things operate and fundamentally move, and what you want to target for risk and reward, and where you want to target it more especially, right? If you're swinging calls, you want to do it when sell side has been rated. If you're swinging puts, you want to do it when buy side has been rated. But it's a game of probabilities. It's not like it's always going to work the same way, but I'm surprised at how often this works, and the probabilities when you're swinging calls at sell side raid is much higher than swing calls at buy side raid. So that's how I think about it, at least. All right.
Like it.
First educational class done. We'll do more of these as time goes on for all of Bob's members. I have a couple of ideas as well for long-term investing and some of the trends that I'm seeing, and some of the stocks as well. Go ahead, Timmy.
And one more thing, folks. If you are located in the United States, don't be afraid to utilize some legal tax shelters. Your 401k, for example, your IRA, HSA, FSA, and also the equivalent to Canada. Those are probably going to be the best place for growth. Some of these tools that we're utilizing, if you're using this in a way that is in a taxable account, can sometimes incur certain higher tax penalties. So just make sure you're taking that into account. Again, anything we do does not constitute any form of financial advice. So please make sure you're taking any trades into account on your own. But that being said, again, always keep in mind tax efficiency. So always utilize tools like RUT, SPX if you can, if you can sustain the capital.
Yeah, tax advantages on those accounts are pretty nice. Anything I do for my personal long-term investing, like commons or long-term swings, I'm doing them in those registered accounts. And that helps me save on tax time because it's tax much lower. And one of the other things I've been doing lately is I just set up a holding company, and that holding company is able to buy and sell assets, whether that's stock, real estate, doesn't matter. And then they're on the balance sheet. So if I ever have a loss, I'm literally just writing them off on my business side. So it kind of works out really nicely in that aspect as well. And the business taxes, I don't know how it is in the US, but in Canada, it's like they're literally half of what the personal income tax is. So if I lose $20,000, for example, in my business, that's a much better tax saving. Or if I make $20,000 on my business, I get taxed at 7% instead of 14% base, right? So that's another way you could do this, but talk to your accountant and then make sure that it's set up for success. All right, good profits from this day. We'll continue doing it tomorrow, and we'll be back. Take it easy, y'all.
Later.
Peace.